to give you a quick update on what's going on in the economy. How is that relating to the housing market? I haven't done this update in a while, so I'm going to cover a few stuff here for you. First of all, today that I'm recording this video is December 6th. Today was the policy decision announcement for Bank of Canada. As it was expected, they chose to hold the policy rate at 5%, but they did emphasize that they're open to the idea of tightening the economy again, increasing rates again if need be, but nobody thinks that's going to be the case. The real challenge now is, are they going to start cutting too early to have the reverse effect that they're looking for? I'll explain what's going on. But basically, there are two contributing factors to this decision. Number one is the Canadian economy, the fact that it's slowing down. So we had a 1.1% annualized contraction in GDP in Q3. They were expecting for it to go up by almost 1%, 0.8%. So it's quite a difference that it went down by 1.1% in Q3. And then we also have a weakening labor market. So for the past few months, we've had unemployment increasing in Canada. So those two factors played a major role, in my opinion, in their decision to say, listen, let's not poke the economy anymore. It's slowing down already. We had the Canadian Consumer Price Index report released towards the end of November, which were for numbers for October, and a consumer price index rose by 3.1% on a year-over-year basis, and it was down from a 3.8% increase for September. So the pace of increasing is slowing down. More important than CPI, as far as Bank of Canada is concerned, is CPI trim, which excludes gasoline, food, things that they cannot control. I will show you the chart there too. That's going down. Main contributing factors for the CPI increase were mortgage interest rate costs, which was more than 30%. I will show you that, and also rent. So those are the contributing factors towards the increase for the inflation numbers for October. We also had prices for services rising at 4.6%, which is higher than the pace for the prior months. Moving on, this chart is showing you the CPI and CPI excluding gasoline numbers, October 2018. As you can see, we are on a downward trajectory. On a year-over-year basis, we paid less for gasoline prices by almost 8%. Gasoline prices were a major contributing factor to showing a lower inflation in October. It was mainly due to a phenomenon in the economy, which is base year effect. Base year effect is last year, after OPEC introduced a major cut for oil production, we had a 9.2% increase last year, October, for gasoline prices. So they ran up by 9.2%. And then this year, we're comparing it to that huge increase, we're down by 8%. So it went up, it went down a little bit, we're still higher than before. But that's the definition of base year effect. And in October, gasoline prices were down by 6.4% month over month, so we were paying less for gas. This chart is showing us property taxes. So everybody is paying more for property taxes. They are a major contributing factor to the inflationary numbers that we saw in October, except for Manitoba. They're not paying more for the taxes, for property taxes. Moving on, the interesting fact that I read from the report was property taxes and other special charges, including mortgage costs, are higher by 4.9% year-over-year basis in Canada, and that increase is the largest increase since October of 1992. So that's an interesting fact. This slide is showing you the main contributors to the 12-month consumer price index movements. The main contributing upward contributing factor was mortgage interest costs by 30.5%. After that, we had rents going up by 8.2%. And interestingly, one of the main downward contributors to the CPI numbers in October was telephone services. They were down by 14.1% across the nation. If I'm you, I'm calling my service provider and say, listen, where's my 14% savings? It says, Amir said that it's gone down by 14%. I would seriously do that. Moving on. This chart is showing you the CPI trim numbers. This is the important number that I track and Bank of Canada tracks. It's more important than CPI because this would basically be a good measurement to find out how their policy rates is actually having an effect. And then except for August, where we had a slight bump, we have been on a steady decline pretty much since the beginning of the year. So if this continues, then we could say that the inflation problem is being controlled, and we could get to the range that Bank of Canada is targeting, which is 1.1 to 3% range. Moving on, the bottom line is that overall inflationary risks in Canada have been receded. We've been dealing with that problem for the past 2 years, but it seems like it's beginning to be under control now. And when I was reading the report by RBC, their forecast was for BOC, for Bank of Canada, to remain on hold until the second half of 2024 before they start cutting rates. The risk obviously here is that we would have a major downward movement in the economy, so we are in a very bad recession. They start lowering rates too early and have the opposite effect that they were looking for. Hopefully that won't happen. Bond rates, Canadian 5-year bond rate is down. It's at 3.4% when I checked it this morning. Actually, this morning when they announced their policy decision, it started going down further. So the chart here, this is the daily change. As you can see, at 10 a.m. today, December 6th, they announced that they're holding the rate, and it went down like that. Isn't that interesting? It is interesting to me. Moving on, the key economic indicators that I would be looking out for the rest of the month. December 7th, we'll have the building permits. Manufacturing sales and orders will be on December 14th. And housing starts will be on for November will be on December 15th. Why are they important? The higher the numbers, the more positive outlook for the Canadian real estate market means investors are spending money. There are more properties being built. We are for sure in need of more properties to be built. That's for sure. We will also be looking at the 5-year bond auction on December 18th. December 18th and 19th are important. The consumer price index for November will be the report will come out on December 19th, and we will also on December 20th we will get the detailed report for the policy decision that happened today. So it will show us, the reasoning why they chose to hold the rate and what they anticipate to happen. They'll release it in December 20th, so I'll be reading that. Anyways, that's it for my update for the economy. I hope you find the information helpful, and if you have any questions, don't hesitate to reach out.